Artificial intelligence, or AI, has become this driving multidimensional force in the geopolitical landscape. It's at the white-hot center of global geopolitical competition, and nowhere is that clearer than in the technology competition between the US and China.
Artificial intelligence has gone from theory to practice, from the earliest days of research labs to today's trillion-dollar investment story.
So there's certainly a phase of skepticism, which is normal for any type of new technology. Then I think it can go through a bit of a period of hype. There's a lot of excitement, maybe sometimes too much excitement, and then that may eventually lead to a bit of a crash.
For the firms that are investing in this, it's a question of survival. Those who don't compete are risking losing out all of their market share in terms of this opportunity.
Welcome to The Bid, where we break down what's happening in the markets and explore the forces changing the economy and finance. I'm Oscar Polito. With recent headlines in OpenAI, from its $100 billion Nvidia investment to its release of Sora, the video content creator, today we're bringing you a special episode, pulling together conversations from across the bid that trace the arc of AI. From its origins in the 1940s, the build-out of infrastructure, its enormous power demands, how AI adoption is reshaping industries, the geopolitical race, and finally, what lies ahead that investors should keep in mind. Let's start with the early days, when AI was more science fiction than reality. Jeff Shen of BlackRock's systematic active equity team joined us to share how the history of AI investing unfolded.
I think the investors' attitude towards this field certainly have gone through, I call it a potential 3 phases. Initially, there's always a sense of skepticism. How can an intelligent system be better than human in behaving or delivering certain output? So there's certainly a phase of skepticism, which is normal for any type of new technology. Then I think it can go through a bit of a period of hype. There's a lot of excitement, maybe sometimes too much excitement, and then that may eventually lead to a bit of a crash of excitement in any type of new technology. Back in 1950s, there was a prediction that AI system would beat the world champion in chess in about 10 years. That did not happen until 30 years later. We all know the story of Deep Blue and Garry Kasparov in 1997.
Contestants, only Kasparov could feel the tension and nerves that went with the occasion. If he lost, it would be a landmark in both the worlds of chess and of science. And that's exactly how it turned out. The game was over in just an hour.
C4 has resigned.
People also may remember that in 2011, the IBM Watson system actually ended up winning Jeopardy.
Legal ease for 1200.
Watson.
What is executor?
Right.
Same category, 1600.
Answer, very double.
And for folks in Asia, the game Go has been around for a couple thousand years. And Google DeepMind developed this algorithm called AlphaGo that actually defeated Lee Sedol, who was the world champion back in 2016. The difficulty of the game is that the number of possibilities of the moves is more than the atoms in the universe. Initially, there was certainly a bit of a hype. Then in the 1980s, there was certainly a bit of an AI winter, and that caused a lack of enthusiasm in the sector. And then clearly, given some of the latest development, I think right now we're seeing quite a bit of excitement, quite a bit of hype. So I'll say that some of these big triumphs of AI systems that actually defeat human or world champion in particular games has been an extraordinary excitement, both in terms of thinking not only what AI can do, but also the potential for AI system to surpass human capabilities.
These breakthroughs proved that AI could not only match human ability, but surpass it in unexpected ways. And from those milestones, AI moved from an abstract idea to an investable theme.
We are talking about the stock market's record highs this year. The tech-heavy NASDAQ closed at a new high yesterday, powered in part by optimism over AI.
Artificial intelligence is reshaping American life, and that includes changing the investment landscape where AI...
So where are we today? Nicholas Fawcett of the BlackRock Investment Institute told us AI's investing story is best understood in 3 phases.
In order to get in the game, we think we need to have a good bat. I'm not talking about sports. I'm talking about a framework for laying out how we see this evolving. And the bat in question is 3 things, 3 phases, if you like. First is build out. The second is adoption. And the third is transformation. The first phase is where we are now, the build out phase, where we're seeing, in a sense, a race to build out AI infrastructure. So data centers, the chips that are needed, and so on. In terms of long-term projection, we think that by 2030, for example, we could be seeing just in the US annual capex on the region of about $700 billion a year. That's about 2% of annual US GDP. So that's a really big number. Underpinning that is this point that the tech needs, computing power needs of AI models are so much bigger than anything that we've seen before. The internet, all the search engine technology, all of that we've seen over the last couple of decades is a lot less computer processing power heavy than AI models. And so chip costs just directly are going to be a big part of the increasing CapEx spend that we see. And it's not just that. In fact, it's also the cost of data centers. These chips run like physically really hot, so you need more powerful air conditioning. You need a lot of energy in order to supply the computers. And so there's a whole ecosystem around just the underlying chip that has to be built out too. In a sense, for the firms that are investing in this, it's a question of survival rather than should you invest at the margin in data centers or chips or so on. Because those who don't compete are risking losing out all of their market share in terms of this opportunity. The scale that's necessary in order to invest in AI requires you to be a really big player in the first place because the CapEx is so expensive.
But this massive build-out of AI infrastructure comes with a hidden cost: energy. AI consumes enormous amounts of energy. Will Su from BlackRock's Fundamental Equities team explained why the energy sector may be one of the biggest beneficiaries of the AI boom.
The energy sector contributes about 10% of the S&P 500's net income, but it makes up less than 4% of the index by market cap. And I think that valuation disconnect is driven by this persistent and, in my view, misplaced fear that this sector has no long-term growth potential. Information processing is energy, and we are processing more information today than we've ever thought of, even from just a few years ago. At its most fundamental level, computations are just moving electrons around a semiconductor chip. But when you multiply that very small electric current by trillions of calculations, the energy demand adds up very, very quickly. And the punchline is, we think there could be up to 1,000 terawatt hours of incremental electricity demand for AI by 2030. And that would be about 3% of global electricity. And keep in mind that the internet today already consumes 2 to 3% of global electricity for things like data centers, networking, transmissions, and increasingly for blockchains. So in aggregate, you could see total internet demand, including AI, make up 6 to 7% of global electricity demand by 2030.
So how will we power this future?
So renewables are by far the fastest growing source of power generation. In the last 20 years, they've gone from almost nothing to 13% of global power generation. And they will continue to grow at a very fast pace. And this is probably a good time to talk about nuclear, which people don't think of a lot, but it's actually today the largest source of carbon-free power generation. Makes up about 9% of global power. So definitely don't count nuclear out in this low-carbon way to power AI going forward.
Once the infrastructure is built and the power secured, adoption follows. Rob Goldstein, BlackRock's Chief Operating Officer, describes how AI is already reshaping work.
People have grown accustomed to interacting with computers in certain ways. They've grown accustomed to interacting with them with a mouse, with a keyboard, through your phone, with your thumbs. But for the first time, there's enough data, there's enough compute power, there's enough technology to fit models that enable you to talk to a computer and to have it talk back to you. That capability, that step function, is actually, in my opinion, one of the most transformative technology step functions we will see in our lifetime. And I think if you look at it through the lens of a COO, the productivity that unlocks is beyond imagination. If you look at it through the lens of just a normal person in terms of helping you in daily life through being able to talk to a computer and have the computer talk back to you, it really is a remarkable transformative opportunity.
AI isn't just about technology or productivity. It's also about global power. Catherine Kress, head of geopolitical research at BlackRock, explained how AI has become a new frontier of competition.
Artificial intelligence, or AI, has become this driving multidimensional force in the geopolitical landscape. It's at the white-hot center of global geopolitical competition, and nowhere is that clearer than in the technology competition between the US and China. The US and China are engaged in this epic zero-sum, long-term structural competition to seize the commanding heights of advanced technologies in the 21st century. There's a strong belief, both in the US and China, as well as in many other countries in the world, that AI will bring tremendous economic advantage to whichever country that leads in it. There's also a belief that AI will spark a revolution in military affairs. To this end, it's not just about the specific weapons that AI may enable, but about the weapon systems that it can enable and ultimately give an insurmountable advantage to whichever country is at the leading edge of AI.
To understand what lies ahead for artificial intelligence, we turn back to Tony Kim, head of BlackRock's global technology team, who has helped define the AI investing landscape. He explains how to think about AI through its stack, the layers of opportunity that are unfolding as the technology evolves.
On one hand, one dimension we should think about AI is there's a stack of products and services. And at the bottom of the stack, there is the chips and the infrastructure, the cloud infrastructure. And a lot of the investments, especially last year and this year, have been going to build that foundation, basically a rebuilding of the internet, if you will, of a new computing infrastructure, which is AI. There is then another layer, let's call it the intelligence layer, which is the data and the models themselves, the foundation models. And those are being built and those are increasing in capability. And then on top of that, there are basically a rebuilding of the internet, if you will, of a new computing infrastructure, which is AI. And the investments kind of start from the bottom and you move up to the top. And in 2023 and 2024, a lot of the investment and a lot of the stock price reaction has been at this bottom layer of the stack. However, it takes time for us to move up the stack. I think as we progress into year 3, year 4, year 5 of this thing, we will start to continue to start moving and seeing opportunities of companies in that intelligence layer and, of course, and finally in the application layer, which has not been as a beneficiary of this first wave of AI, which we saw at the bottom layer of the stack in the infrastructure. We as investors, we are looking across all of these layers of the stack. The market will evolve over time, but we are seeing, at least in 2023 and 2024 for sure, a huge focus and emphasis of building this foundation of the AI infrastructure.
Tony describes how the investing story is layered, starting from chips and infrastructure through intelligence and models, and ultimately to applications that will transform industries. But what happens as those capabilities continue to grow at exponential speed?
AI at the frontier, I love this terminology. What we're seeing is these rate of change, of unprecedented rate of change. And humans were used to linear kinds of change. Grow at 5%, 10%. And what's happening here with AI, we are seeing change at the chip level 2x a year. And we're seeing change at the model intelligence layer 10x a year. That's like a 20x potential improvement in capabilities if you take the chip and the model improvements. Could be 10x, 20x. But we're seeing this exponential scaling of capability. We could see thousands of X capability improvement. So if we believe that to be the case, and this is AI at the frontier, it is hard to imagine what that means for society.
But investors need to consider what that means in a portfolio. Jay Jacobs, U.S. head of equity ETFs, frames the use case succinctly.
I think because there's overlap between the technology sector and AI, people just have to consider what is that intersection. We know that investors that are looking just broad benchmarks across US equities or global equities are going to have a lot of tech exposure because these are some of the biggest companies by market cap. But if you really want to have granular exposure to AI and really benefit from this mega force, you have to really make an intentional allocation. So one way that we're seeing investors do this is selling down technology exposure and replacing it with an artificial intelligence basket. That's just one way to fund it. We see other people maybe even selling down core exposure and buying an artificial intelligence basket.
From its origins in research labs to today's massive infrastructure build-out, to its growing energy needs, adoption across industries, role in geopolitics, and exponential future, AI is reshaping not only markets, but society itself. For investors, it's a story still being written. Thanks for listening to this special episode of The Bid. Next week, we'll hear from Alex Brazier, all the way from Singapore, to discuss market developments in the Asia-Pacific region. Make sure you subscribe to The Bid wherever you get your podcasts.
This content is for informational purposes only and is not an offer or a solicitation. Reliance upon information in this material is at the sole discretion of the listener. In the UK and non-European Economic Area countries, this is authorised and regulated by the Financial Conduct Authority. In the European Economic Area, this is authorised and regulated by the Netherlands Authority for the Financial Markets. Reference to the names of each company mentioned in this communication is merely for explaining the investment strategy and should not be construed as investment advice or investment recommendation of those companies. For full disclosures, go to blackrock.com/corporate/compliance/bid-disclosures.